This past week ended with a little bit of weakness. Is that an indication that there's going to be a more substantial correction on the way, or is it just a dip before the Santa Claus Rally? That's the analysis we'll do this week. I'll teach you how to read the charts to figure out whether we are on the edge of a crash or remaining in an upward trend. Next, I will do my normal market analysis. We'll look at stocks, commodities, currencies, and the bond market. And then finally, we're going to look at the trade of the week. All right, let's get into this week's topic, which is all about Santa Claus Rally or stock market crash. Now, we've had considerable gains in 2024. Investors, many, are looking for a market correction. It's this mentality of what goes up must come down. Now, we often see strength going into the end of the year, and we refer to that as the Santa Claus Rally. So what's going to happen? Well, a critical event this coming week is the Fed meeting on Wednesday. There's a 93% chance of a quarter-point cut in rates. That means there's a very small chance that the Fed won't do anything. However, what is important is what the Fed says. Now, we shouldn't, discount the fact that the trend is up. And really, crashes are predictable. And so I want to show you what to watch for. So let's jump into the long-term weekly chart of the S&P 500. And let's look at the places where we had substantial sell-offs. We had a substantial sell-off here. That was the COVID crash. We had a long downward trend in 2022 as interest rates were rising. And then we've had these shorter periods of weakness in the last year and a half. Well, notice that all of these come when the upward trend line is broken. So if we look at all of these events where there was substantial selling, it all comes when the upward trend line was broken. And we don't see that now. We had a little bit of weakness last week, but until we break the upward trend line, we shouldn't be too concerned that a serious downward move is imminent. Now, that doesn't mean we get complacent. We do have to watch. And here is the daily chart. That last chart was the weekly chart. And we can watch here a little more closely. And what you want to look for is a break of this upward trend line. If I draw it something like that, if we start to break down through that, that's a concern. Typically, more substantial corrections come when there's a build of a falling top. And so you'll have a new high, you'll rally up, attempt a new high and fail, and then you get that more substantial weakness. We don't have any of those things yet, and so we shouldn't get too concerned that there is a major correction coming. All right, let's get into our normal market analysis now. We've already looked at the S&P 500. I just want to take a quick look at the very short-term chart of the S&P 500. This is the 1 month, 2 hour chart. And there you can see just that little bit of weakness starting this past week. But again, we haven't really made a breakdown. We have built a slight falling top. And so if we start to move down through those lows at 602 on the SPY, could get a little more defensive, but for now we remain up. Let's take a look at the NASDAQ 100. QQQ is the symbol. On the daily chart, you can see we're reaching to new highs. If we look at the short-term chart, again, no break of upward trend. How about the IWM, which is the small cap sector? And there we see more weakness. If we look at the 1 month chart on the Russell 2000, you can see that we are in this little shallow downward trend and then a little more accelerated selling at the end of the week. And the reason for that is something I'll show you at the end of this section on the markets. But essentially, the bond market went down, which means interest rates went up. And the small cap stocks are much more sensitive to interest rates. So that makes that Fed announcement next week real important. Now, we shouldn't ignore the fact that we're still in an upward trend, but it is a choppy upward trend. You see a lot of uncertainty, a lot of volatility in the small caps. And 2 weeks ago, the small caps were pretty hot, and now they're starting to cool a bit again. As we pull back to that trend line, we should bounce off of it and start to move up soon. Let's take a look at the TSX and a little bit of weakness at the end of the week there. You can see right there, but we haven't broken this upward trend line yet. Looking at the short-term chart, there you can see a very short-term upward trend was broken, and we've built a falling top and broken down. So in the short term, there is that weakness there. We want to be a little bit cautious of that. The trend is still up, but let's be a little bit cautious. Now looking at gold, gold has obviously been great over the last year, maybe even longer. Let's take a look at the 3-year chart there. Yeah, so basically this year is when it started this move. We had some strength in end of 2022, 2023 as well, but this breakout from an ascending triangle was the buy signal for gold, and we've been moving up ever since. But now we're flirting with this upward trend line, and we could be building that falling top, which could lead to a breakdown. So we want to be a little careful with gold. It is possible that we'll start to see a correction in the price of gold. How about oil? Oil actually caught a bid this week, moving up a little bit. It's still stuck in this general downward trend, but it's starting to show a little bit of buyer interest. I wouldn't get too optimistic because you can see there that little bit of buying over the last week and a half really hasn't broken it out of this trading range yet. It's just sort of bouncing back. So we'll watch that. It might turn into something. It could be that 2025 is the year for oil. How about the bond market? Actually, let's look at currencies first. UUP is the symbol for the US dollar. You can see it's moving up. And one of the reasons is that while global economies are slowing and having to lower interest rates, the US economy is staying pretty strong, and interest rates maybe aren't going to go down as quickly as in other places. That makes it more desirable to hold US dollar denominated assets, and that is the reason the US dollar has been doing so well. If you look at the 3-year chart, you can see we're coming up to some long-term resistance where we may reverse, but currencies like the Canadian dollar really been beat up against the US dollar, and this may soon change if the US economy starts to slow and they have to start lowering interest rates. All right, final chart I want to look at is the bond market. No, let's look at crypto first. GBTC is one of the symbols for crypto, and you can see the trend there is up. It was volatile through the most of 2024 and then broke out and now in an upward trend. I think it's due for a pullback, and the reason I say that is if I draw a trend line across here, we're quite far above, and so that usually resolves with a little bit of a pullback, but I would use that pullback as a buying opportunity. Taking price back to the trend line is always a good place to be a buyer. All right, finally, let's take a look at the TLT chart. And this one's quite interesting because you can see here at the, well, really most of this week, just a very sharp move down in the bond market, which means a sharp move up in the interest rates in the bond market. And that really the market's saying we don't think the Fed, the US Fed, is going to lower rates as much as we had hoped. And so we'll really have to be paying attention to what the Fed says on Wednesday this coming week when the announcement on interest rates is made. So my ratings then, bullish for large cap US and NASDAQ. Small cap, not quite as good, only neutral in the short term, but still long-term bullish. Canadian stocks, I've dropped it to neutral short term because of that weakness that came in. Same for gold. Oil is improving. I've only got it at neutral on both time frames, but it is starting to look a little better. US dollar bullish on both time frames, same for Bitcoin. And bonds, look at that short-term rating down to bearish because of that sell-off this past week, and neutral in the longer term. All right, now it's time to look at the trade of the week. This is an example of a stock that we traded in my Stockscores active live service. You can learn more about that at stockscores.com, as well as the education and tool offerings that we have. Let's dive into this chart. We always look for the action candle as a clue that the stock is moving up. So in this case, what I noticed was this action candle on the 13-minute chart just before noon on Friday. So that tells me that the stock is in play. Now I have a saying, let the long-term time frame tell you what to do, and the short-term time frame tell you when to do it. The long-term time frame here is saying that this stock is a buy because it's surprised with strength out of this sideways range with abnormal price, abnormal volume, and that's why we've got this pink and yellow dot there. That is what I call my action candle indicator. We can then dive into the short-term chart and look for opportunities to buy. So that initial break was right here. That's the one I showed you on the 13-minute. And I like to buy pullbacks. So it pulls back, the market's sort of doubting the strength, and then it starts to move up again. So that then becomes the key place to get on board with an entry right about there and then a stop right about there. And you can see the stock went up nicely, earning about 1, 2, 3, 4, maybe 5 times risk, 4 to 5 times its risk. What that means is for every $100 of risk you take, it earned $400 to $500 of profit, and that's a great trade. Anytime we can get more than double our risk, that is a trade success. Hope you've enjoyed this week's Market Minutes. If so, click the like button, leave a comment. Where do you think the market is going into the end of the year? I'd love to hear your thoughts. And of course, if you're not subscribed to the channel, and most of you are not, please click on that subscribe button. I appreciate it. And as always, trade well.